Hello guys, glad to have you on board again today. I'm really sorry about yesterday. I just totally forgot about releasing the video for you guys in English as I had an appointment, and I just left thinking that this was a done job, as I didn't even record something for you. So anyway, we're just going to try catching up on this today, as no matter how and no matter why, yesterday wasn't an interesting day some way, at least not in an intraday trading basis. Today might be a little bit more interesting, as I now have a scenario to share with you. But first we're going to take care of the cryptocurrencies, because I expect that many of you guys are trying to wonder what the hell's happening right now, why the cryptos are going down, as Phil has said it's supposed to go up. So first, let's come back to the essential. I never said it's supposed to go, it will go up. I said I think we have decent odds for this to play its game to the upside. But I also said that I didn't have a clear sight, at least not enough clear to trigger a speculative entry otherwise than a bullish breakout, which we didn't have. And on the opposite, we've got a bearish breakdown happening just right now. But does it really matter? How far should we be concerned about that? What does that really mean? We're going to just talk about that. So I said I need to figure out what the hell the range structure is. And I said this back then, this doesn't sound enough to me to buy. So I said, okay, I'm now waiting for a potential triangle to build itself. We didn't have such thing. On the opposite, we had the market rushing through the rushing to the resistance and failed to break it up. And now I said, okay, it could be just a subwave 1, 2, 3, 4 to wave 5. That's what I was forecasting back then, bullish trend. I'm forecasting bullish impulses more than bearish ones. But what we're having in here seems looks like a bearish impulsion. So in what kind of context can you have bullish overall trend and bearish impulsions? It's simple as that. It's when you've got flat structures going on. This is exactly what we have. ABC, ABC, 1, 2, 3, 4, 5. So it's bearish, it's brutal, it has a wave 3, a sub wave 3, which means it's trending like. It's brutal because you guys think the market is now back to bearish. It's breaking supports, it's straight line, and it's somehow changing people's minds, even though the overall scenario hasn't changed at all. It's more likely that we're fucking up stupid traders who now think this is bearish again. They're probably gonna sell their Ethereums or Bitcoin or whatever shit this is that they have, and they'll basically think that this is over one more time and that we've been doing this so many times in the past. Why would it be different in here that it was back then? So yes, we're probably going to drop again, make new lows, and you're going to see a bunch of shit out there in the social networks, everybody figuring out that this is bullish, this is bearish again. As to be honest and clear, it isn't to me at all. What we're doing in here is just pure and simply wave C, which will look like an impulsion. So the feeling the people should have in here is that the market is bearish, as it isn't. It's just a final wave of a consolidation. Are we breaking through a single support with that impulsion? The answer is no. So what is that impulsion? It's not impulsion, it's what we call end of consolidation. It's brutal because the range is mature, so we're crossing the range pretty rapidly. But I still very well tend to believe that we're going to find some strong support in here out of the previous support, and definitely is where I'm going to buy as well, if the conditions are met, which means I want this to be a 5-way structure. We're currently trading wave 3, so if we just go straight line to my targets, I'm not going to buy. What I'm going to buy is a wave 5, so I need to wave 3 to terminate, range a bit, wave 4, and I need wave 5 extension to buy. This wave 5 generally tends to be near the A point, as the B point slightly got on top of a wave of the origin point, but not extended. Remember that the extended flats reach out to 127, 138, which we obviously didn't in here. Okay, this is where we should have gotten ourselves to, and as you can see, we failed to break 105%. So which means we're flat, totally flat consolidation. And on that perspective, generally C point goes straight to A point, but we'll generally not break through this, which means we're probably not going to break through A. We're just going to stay in here, find some bullish support, and reactivate bullish again. So we're going in here not because the market is bearish, but just because the bulls are asking for those prices right now. Obviously the bears will manage their risk in here, lots of bulls, fewer bears. Obviously I think the price will reactivate. Will require a signal. I'm not going to trade without that signal, but as for now, do I have any kind of rising risk perception? Absolutely not. I'm even clearer. I have a clearer sight right now because I can clearly identify the range structure. Doesn't mean it's going to happen that way. All it says is that I'll now have a decent confidence about the range structure. I can define this to highly probably going to be a flat structure. So I know where I want to buy, because the range is now mature, and I definitely know that if we're reactivating here, we're going to have the bullish impulse right after, because mature range, next wave is going to be bullish. It's going to be compared to wave 1. It's simply the same thing. It's just that we fucked up the timing, pure and simply. Everybody thought we were ready to go in here. Whoever was stupid enough to buy the resistance got caught. And just to set things straight, look at those prices. Look at where we are. We're already 20% down. We're probably going to make a 30% drop, which means whoever the fuck has been buying this with a leverage 3 will be fucked up and be stopped out margin call if we just go there. And believe me, we're probably going to go there. So it's pure and simple. It is. What have I told you? Speculative trades requires a lot of confidence, especially when you're trading range structures, immature range. Now that we might have a mature range, a structure, buying that dip in here is going to be risk limited. Obviously needs a signal, but if I got all the conditions met, you can be damn sure I'm going to reinforce my positions on Ethereum with a speculative trade. So don't fear that. I've been trying to teach you guys to have cold-blooded decisions when the market is moving. Like, obviously all the dumb traders in here are probably overthinking this. It isn't. We were just trying to figure out what the damn range was. Now we have a decent odd that this could just be a flat. So on a flat, you buy the exact same support as the first bearish impulse, which means you're looking at those prices to buy. And whenever we'll get there, and the signal is going to be a trigger. Now, other asset classes pretty quickly on a swing perspective. We're going to talk about the stock indices right after, because we're going to cover them on an intraday basis. All the rest is basically doing just fine. I'm pretty fucked up because I missed the AUDNZD. I knew I was looking for that support yesterday, and fuck it, I just didn't take that trade, and that's a big mistake of mine because we're reactivating early. We had stops in here. Sorry about that. So no, the 2-hour chart time frame doesn't really get to what I need, but I think the 4-hour will. I need something that shows up that range structure. Yes, definitely this. So we're reactivating bearish in here, so I very well expect us. Normally, we're reactivating out of 50% channel, and I would pretty much like us to go in here, find some strong support. So just go there, okay? Keep up, keep that consolidation up next week, early next week, and then go straight forward bullish with that nice bullish perspective. Obviously, if we just go straight line starting now, no problem with that. I'm already in the market, but the thing is that we could still have some sideways action in here, and I don't want to be buying resistances, but more likely buying at least interesting prices, which mean at least median prices of the range, or even more interesting ones. So I would suggest just patiently waiting out there is kind of the option, and I would say the 4-hour chart time frame kind of very well shows how this thing goes. That being said, what we're doing, god damn it, the fuck is that? I was supposed to have cleared those lower shadow candles. So something I'm still working on the algorithms. And I expected to release them later today, but I still see some bugs. This is supposed to be taken care of, so I may have to optimize a few things in here still. So sorry about that. I'm just gonna try taking care of that. So AUDNZD is cleared. Tesla, I remain bearish, kind of a sideways action. I think we got the ABC correction. We're right into trend reactivation. If we're trending bearish, we're supposed to find some bears showing up in here pretty soon. If for some reasons we're holding up to that trend channel, then means the bulls are in control and that I'll be wrong and I'll have to surrender the stop loss. I still don't believe that at the current time, but obviously if the market proves me wrong, I'm going to get out. Probably at that stage, as I still have some pretty decent bearish prices on top and reinforcements in there, means if it goes wrong, I'm probably not going to take a loss or a tiny loss. As obviously, if it goes down, I'm going to fully load the account with nice gains, but that's the market who would take the decision. Eurobounds, I'm still waiting for something to happen in there. Facebook, Nvidia, Electronics Arts just works fine. Moral and Prom just gone very well. ABC as well. Those are French stocks that I didn't cover on the US versions. GE still working its way up and down, but we clearly are wave 3 in here. As you can see, wave 1, 2, 3. Very nice wave 3. So we could very well expect some more gains and reaching out to the first targets probably in here for those who've been taking speculative trades. But I still tend to believe there's a lot more potential in the long run, and even though the US market isn't looking that great, definitely General Electric is, and I see absolutely no reason to get the fuck out of here until we get to the volume area and some slightly higher extensions afterwards, because we've been crazy bearish. We probably have to make it the other way as well. So going on intraday basis right now. Alright, so let's go SPX daily basis. We're going to do intraday trades, trying to figure out whether them support and resistance are on an intraday basis just for a single trade, a single day trade, trying to sell the daily resistance, picking up the gains, or trying to buy the daily support if we're and assessing which one is the most interesting, selling the resistance, buying the support, doing both of them. All the options. So first we try to figure out if we need to favor buying or selling pressure. This is what we do when looking at the SPX, which is the caching market contract, the one that is 9 a.m. to 4 p.m. and we just look at that. So what we're having in here is looking at price gaps or whatever that we have. So we got a tiny gap in here that we could probably take care of. At least, as I said, for the French guys, I think this is where you can set your stop losses. I think this is the kind of gap we generally don't fill in the consolidation waves. So I think there's a safe stop loss to put on top of that level. So I would say stop loss have to be set on top of 26.50, and I'll say 26.60 seems to be a decent price for a stop loss, and anything that's going to bring interesting risk reward ratio in between is going to be something to take. So in an SPX perspective, so if you figure this out, consider this as being your risk management area. Alright, and if you use the algorithm, it says anything in the red area in here is something you want to take, because the stop loss in here costs a lot less. What the fuck's that? A lot less than what it is to reaching out for that target. And I think we're very well going to reactivate bearish in here, go bullish in here. So it's a nice bearish trade with a first taking profit and second taking profit in here. Approximately, okay, it's applying the range strategy, even not knowing where the range top is going to be. Anyway, so on the daily structure, what we're having in here is a bullish momentum, absolutely no signals for now. We've been trading Fibonacci retracement, 38%. I think we're very well going to work out this area and very less likely going to rise till the next one. We're having a look at the 1 hour chart time frame to figure out what the underlying price structure is, and what we have right in here suggests a first bullish impulse in here, second one, and third one. So with third wave up, suggesting this is very likely going to be an ABC consolidation structure, because what we have is a 5-wave impulsive structure, so suggesting what we're having is an ABC structure to come, okay, with 2 bullish impulses and 2 bearish consolidative waves in between. So that's the price structure that I still forecast to be. So we'll be final wave of the first bullish impulse. So yes, we're going to favor the selling entries right now. It doesn't mean we don't have to buy. It just means that we're probably going to have to favor the buying entries, favor the selling entries, because those will have the better potential for further gains. Okay, if you want to hold some trades for further or longer time frames, it's obviously going to be the selling entries more than the buying ones. So the buy ones have a short time frame scale, the selling ones have both a short term and mid-term scale scaling. All right, so what we're having here, we're looking at intraday charts right now, looking at the futures contracts and trying to figure out a way to assess that 5-wave structure we've got ongoing in here. So 1, 2, 3, 4, and 5. So we still have some bullish potential. So buying could be an option, but we have no buying signal right in here on the 1 hour chart. But we're not doing this in intraday, so we're going to switch 15-minute time frame and see if we have something that we can exploit in here. Well, I would say yes, definitely is a wave 4 in here. We've got tiny signals in there, but kind of interesting signals. So we need Fibonacci retracements in there. Okay, it's just let's just go back, replay. Fibonacci's were obviously displayed in here. It's just that now that we switch to a different view, we have the other fibs shown and displayed. Let's see how it went. Alright, so fib in here, and this is definitely where we've gone. So we've got Fibonacci support at 2550, and that's, I bet this is where we've gone to. Exactly. So we're reactivating perfectly on a 23.6% retracement. I would say this is definitely a buying signal. Remember that those signals, the gray signals, are the one you take only if you're trading at an interesting horizontal price level, meaning overlapping support or resistance, or Fibonacci level, strong Fibonacci level. What the fuck? So what we're having in here is a reactivation out of 23.6 retracement with a low risk signal, with a high risk signal, but these are takeable some way if they're opening on some kind of level that we have been trading. So I would say yes, that's definitely a buy signal. Requires a stop loss, obviously, because if we break down the 23.6, we're just out of the game. But I would say pretty decent odds so far to hold this one. We'll see how this goes. If we fail in here, then no problem with that. If we just go another retracement, normally we have to break this wave first, so we need to go there and then reactivate 2 waves bearish as well. That's an option, and in that perspective, we're going to reach out to 38% Fibonacci, which is lower than that. Let's put the fibs on place so we'll have them. Alright, 38.2 is in here, and we could definitely go there without a problem. So this is the next area to buy. So I would say that's the support to buy today. Alright, if we go there, that's a buying entry to me. Alright, so let's, oh, sorry, we should use zones in here. So let's say, okay, this area is where we would like to buy. Okay, so long buying entry in here where we've got the resistance. So let's say starting there, okay, this resistance, going down to this. I'm giving you the trick. I'm gonna tell you how I do this. Well, if we go there, all right, if we go stronger bearish in here, and if the wave 4 enters into wave 1 territory, when we've got diagonals, okay, leading or ending diagonals, when you've got this at play, generally the wave 4, as it enters into wave 1 territory, it is generally going to search for sub-wave 1 resistances, which means wave 1 had some underlying resistances. You can clearly see where they are. It's where we left volume. So in here we left volume. Okay, in here we left volume. Okay, we've gone there, resistance, trying to build support, break the resistance. So this is where we found the resistance on wave 1. So this is where you want to buy. Okay, all those resistances, prices area where the market had to digest before going higher. So we got there, and there as well. And these are all the resistance we had throughout wave 1. I definitely think we're not going to go there. So these are the two ones we'll favor. This one, very less likely going to be the case, even though it's still possible. But no way, because we're below wave 2. So this one doesn't work out. This one obviously not as well. So it leaves us with this one. And this is the area I would definitely favor. So I'm going to take the highest price we've been reaching out to the lowest price where we found support down to. And generally this is in that area that we're probably going to find the wave 4 if we go there. Remember that if we just reactivate in here, you're fucked. All right? So that's obviously how I want to play that game in there. And I would definitely say that we've got decent odds to do so. So I'm just going to put my alert in here. All right? And it's going to be buying entry upon signal only. God damn it. What the oh, Jesus. So anyway, just putting an alert down there. So it's intraday support entry. So I'll do it with an expiration today, because we don't need more than that. It's today or not. Yes, use the SMS. Just once. All right. So that's how we do. All right, there, definitely we got to buy entry. All right, so this is just because I want to know what this is about. Okay, so this is wave 4 kind of buying, and we're just waiting to see if this consolidation in here and that bullish signal is already enough for the market to buy again, searching for that wave 5, or if we're going to need extended consolidation entering into wave 1 before having the wave 5. In that perspective, if the structure is wave 4 is in here, which is to me very less likely going to be the case, but if it happens, it means the wave 5 it will be shorter than wave 3. So you generally take wave 2 to 3 extensions, all right, down to wave 4, and you generally search for at least 61.8, maximum 88.6. Gives us a pretty decent area to sell in here for wave 5. That's probably going to be reached out to not today, but probably later today. So if we go bullish today, we're buying in here, we're probably going to sell at the end of the session whenever prices will reach out to there. All right? So I don't think we're going to terminate the day higher today. Probably just going to go there, closing at the high, and tomorrow is going to be the bearish day. So if we're looking at selling entries, probably not going to happen before later today or eventually during the night session. So the selling entry is done in here. So this is where the next swings may happen. Otherwise, you can do trade intradays, no problem with that. You just follow the 2-minute short time frame and you just forget about everything we said earlier. Anytime we go searching for context, that you got a clear signal, you get yourself in the trade, risk manage, and play your usual game. All right, what we have in here is a range. So what we're trading is anytime we're reaching out to those boundaries, you can take a trade. All right. So what, for example, is a decent trade you could have taken in here, no trade, in here no signal, in here exit is where you would have traded. In here first trade, first possible trade to take, exit structure oversold below the context, definitely what we're looking at, we're looking for. It didn't work pretty well as the market fucked it up right almost instantly. downward trade, but it offered you some gains, some short-term gains for quite a long time. But normally you should have entered in here, all right? So enter in here, secured in here, so secured at the enter price. But you're supposed to secure when you're reaching out to the bearish trend channel. So in here you should have secured. You've got bearish signals as well. So you should have taken 50% profit or 50% of nothing in here, to be honest. And normally you should still be in that trade. Normally you should still be bullish at the moment, kind of waiting if you were ready to wait for all that shit, because so far you've got nothing that suggests you should get out. You should be waiting for the bearish context to play its game, so waiting for bullish, profit take, and try to reverse. Alright, so that's what you should be at play right now. Still bullish with a pretty fucking price, not a decent price to buy. So I would suggest if you took that thing, basically secured in here 50% without profit taking, and I would suggest you just get the fuck out from right now and you just let it go. It's uninteresting on a 2-minute chart time frame. The Eurozone session is really like a painful waiting thing. So that's it. I think 2-minute chart time frame is right in the middle. We're trading 50% trend channel out of a 50% context channel, so it's definitely the worst possible prices to trade. So if you got in, just get the fuck out. You're trading the average price and you didn't really catch up on a good price, so that happens. When it happens, you just get out. No gains. It's always better than taking a loss. So no decent information, waiting for the prices to reach out there and trigger another signal into the 15-minute chart signal area, or we just wait for an extension for a 2-minute bearish trade, possible bearish trade, obviously with a stop loss associated. That's it, guys. I'm gonna wish you a nice day. We'll see you again tomorrow for closing, for the weekly close, and see how it goes and what we may expect for that week to close. Bye, guys. Trade safe. It's not necessarily going to be the best of a day for an intraday, and moreover, we got the Fed later today, if I'm right. It's with Thursday, so we should have the Fed's minutes. What the fuck? Why isn't that on the economic calendar? Let me just give me a minute to check that out. Oh freak, that was yesterday. I'm so exhausted. So yes, Fed minute out of yesterday. Today is ECB day, and Chairman Powell is going to talk later today. So these are the catalysts we have today. It's pretty damn hard to figure out how they will play. The ECB is pretty much expected, as we've been stopping QE. The market is going to try to decrypt how Mario Draghi is going to communicate with the market throughout the press conference. But definitely is going to be interesting day today for that ECB meeting. Oh, and sorry, of course, wrong again. It's no ECB conference, press conference, just the minutes as well. It's going to be released. But anyway, the market's going to decrypt this. What are the vocabularies? I mean, all the algos will just basically do their job, trying to figure out something with this document. So anyway, kind of a move expected at the ECB's minutes release, and then we expect some movements as well when Powell is going to talk through. Bye, guys, and wish you good trades. So as I said, we're kind of neutral prices right now. Absolutely uninteresting. It's kind of a 50-50% game. We're trading average prices, and the price will go either there or there, and nothing is interesting in between. So let it play with the ECB, and if we go there, it's a buy signal. If we go there, it's a sell signal. Simple as that.